And on that note, let's transition into interest rates, right? They were talking about dropping it 4 times this year, you know, to kind of help the market and help lower the inflation. The thing about inflation, 9 times out of 10, once prices go up, these retailers, they hardly ever drop the price when the inflation rate goes down. They kind of just stay where they've gone up to, right? That's the unfortunate part about it. However, gas prices came down, so certain things are coming down. You know, if you got gas prices, that affects like the 18-wheelers that transport a lot of the building materials, so it does relate to the real estate industry. Last week or 2 weeks ago, the Feds bumped the interest rate back up a little bit, and the reason they gave is because the inflation hasn't dropped to where they're confident in dropping the interest rates. You know, if they drop the interest rates right now, the economy might crash and we can go into a recession or depression, so they're trying to manage it and manipulate the currency, so they kind of have to keep the interest rates up to prevent a recession from occurring, right? So current interest rates right now, 30-year fixed is at a 6.859, almost a 6.9, with an APR of 6.939. 20-year fixed is at a 6.739 with an APR of 6.84. 15-year fixed is at a 6.043 with an APR of 6.175, and a 10-year fixed is at a 6.094 with an APR of 6.328. So we're looking at the 7s and the 6s. Let's see if we can look at an FHA to see what the FHA loans are looking like right now. I'm trying to see if I can pull up the FHA rate. 30-year FHA is at a 6.143, but the APR is just as high, almost as high as the 30-year fixed, 6.925. Good thing about FHA is you don't put a lot of money down, but the way things are looking, it's still high substantially, right? 30-year fixed VA is at a 6.0. So the best you can get is the VA rate for the veterans. So that is actually the 10-year fixed is probably better. You're just gonna have to pay a lot more if you're only paying, if you wanna pay off your house in 10 years. So if you get a 10-year loan, even though it's at a lower rate, your payments are going to be higher depending on how much you put down. All in all, to summarize the interest rates, they're still high. We were hoping they would be lower going into the spring so the real estate market can kind of kick up, because as you know, it trends up in the spring and also in the summer. However, things haven't panned out the way the Feds were expecting, so they decided to bump the rates back up a little bit to kind of keep the economy steady. So we'll keep an eye on it. It is an election year, so normally what the government tries to do is do whatever it can to get the economy really good so they can use that as talking points when they do their campaigns and also their debates. And it's almost like you forget, they expect you to forget the previous months or years of high interest rates and just hardship. You know, they get things down and really nice during election year to brag about what it is, rather than saying, oh, we got it out of that funk that it was in, and if you let us keep ruling, we'll even do better. You know, so that's kind of like the norm of how things go in election years. So hopefully things will slow down as far as interest rates and talk of recession, and the market can become steady. You never know, right? Well, that's where that is, and we're going to move this thing on.